This is going to be the most boring video on my channel, but if you listen very carefully and attentively to this video, the video I'm going to post after this one is going to make sense to you. So I want you to watch this video up to the end. It's going to be a short one, but listen very carefully because it is going to help you to understand what I'm going to explain on the video after this one. All right, let's say you have a market that is on a downtrend, and then all of a sudden the market starts to move to an uptrend. All right, now there are some things that you need to pay attention to. So you want to know about the anatomy of M's and W's, right? Now this market was on a downtrend and all of a sudden this market is now on an uptrend, and you want to know where exactly this market is going to make a 10. All right, and then it comes close to the price and you are on the third level and the market gives you the first leg. So where exactly are you supposed to take your trade? The market is going to give you a second leg. All right, so it means you will take your trade right here. So there are key areas in the market where to expect the market to turn around. So unless and until those key areas are dealt with, the market might not turn around. Now, if you are an ICT trader, you know about order blocks. If you are a price action trader, you know about trend lines. You can still use those key areas where a market has to touch a trend line, or where a market has to turn it an order block or a fair value gap, etc., etc. You can use those key areas as areas where you expect a market to turn. They can actually help you to see or to know what kind of M and W to expect in the market. I'm going to show you that in a chart. All right. So this being your key area, now you have a market showing you a shorter first leg and a longer second leg, or an extended second leg. All right. Now, why does the market print M's and W's? That is $1 million question that I'm pretty sure most of you know about it. But some of you might be wondering, why is the market printing M's and W's? So you find the market will print you a nice double top there, or sometimes give you something that looks like this, sometimes give you something that looks like this, or sometimes give you something that looks like this. All right. Same applies with W's as well. It can give you the same thing as well. It can give you a shorter first leg, a longer second leg, or give you a longer first leg and a shorter second leg, or give you also a head and shoulder pattern. You can also have half Batmans. There are a lot of patterns that you can expect at level 3s, high of days, and etc., etc. But these are the most common that you would expect. Or sometimes the market can actually give you that third hit right there, all right, to make it an M with 3 legs. But we're just gonna deal with the one with 2 legs for today. So why does the market give me an M and a W? All right. Now, for you to know the reason why a market gives you an M and a W, you need to know how the market traps traders. All right. So you were having a market that was on a an uptrend. So the market was pushing all the way up until it got to that point there. I can guarantee you that there are some people who actually have money, or they do not have the knowledge, who would enter buy setups right here and hold. Reason being, they are seeing that this market has been on an uptrend for a long time. So this is a long-term uptrend, all right? So some people, they will let the market move in a certain direction, 1, 2, 3, 4, 5, 6, 7 levels or whatever, and print highs and lows, and then they will say, yeah, that market is on an uptrend, so I am expecting that market to be like that for a long time. So they will place in their buy positions and hope for an outcome. Now, as the market goes into profit, some people are going to stake in stop losses into profit or break even or whatever. And then when the market reaches this point right there, some people will say, we are now expecting the market to come down because it is at a key level. Maybe this is an order block. Sorry, I'm not saying this is about ICT traders. I'm just giving an example, all right? So maybe there's an order block right here, or a trend line, or a previous M or W or whatever, and you're expecting the market to reverse, and it does come here and reverse, and people start to stake in sell positions, all right? So what happens is, for those who were on a buy, all right, they are going to be wiped out, okay? They are going to be taken out as the market is moving against them. So when they are being taken out, some people will be having stop losses sitting here, okay? They'll have stop losses sitting here. So they are still safe. They have no problem. Now, after the market has actually given sellers, all right, positions to enter, then the market will decide that we are going to go back up. So by going back up, the market will take away those who took sell positions, all right? Those who saw an order block, trend line, M or W or whatever, or level 3, etc. And it will take them out as it moves back up. Now, those who were on a buy here, they will see another new opportunity emerging in the market, number one. Number two, they will see the market respecting the previous high or a new low, higher low. And then they will say, we'll take buy setups. They will even add more positions for those who have stop losses at the bottom here. They will add more positions. They will pile positions. Now the market is loaded with orders. Remember? So you have got one buy orders here, and you've got the second new buy orders there, all right? And you've got sell orders having been taken out here. Now the market will come back right here, and what they will then expect is the market to break out, retest, and continue going high, all right? And then the market will spike up. They will add more orders because now they are confident that the market is in an uptrend. Now what happens is the market will quickly issue a long candle going down, and maybe close the market halfway there. And then they'll be like, no, they are just coming to retest the low, or they are forming a new higher low. Then people will stake in more buy orders. Now, I'll tell you this. Every time when you place a buy on that pair, always remember there is 1,000 people who are thinking the exact same thing as you on that particular time. So there's people who are like, oh yeah, I also see a buy, I also see a buy. So 1,000 of you are actually entering at the same price point, all right? So always think, I'm not the only one who is thinking that at that particular point. There is many of you, okay? So now people are taking buys, and what the market will do, it will quickly move away and make sure it takes out all the buyers here, and also wipe out even those buyers who are still sitting there. So you have got now almost 3 times buyers and only 1 times sellers. All right. So you've got 1 times sellers and 3 times buyers. So this is how the market ends up printing M's and W's. And again, as if that is even enough, when the market pushes up to an ID50 or a retest of the neck, whatever you want to call it, right? Some people will still stick in buy orders there and say, yeah, they are respecting that low there, so let's get in with our buy. And then the market quickly moves away from them and the market will move away. The same thing repeats itself again when they get to the low there. People will be like, no, this is a long-term sell now, so we need to enter ourselves. I can assure you, a lot of people do that in the market. You might not know them, but there's a lot of people in the whole world who would be doing exactly the same thing that you do at a particular point. So that's the reason why the market ends up having M's and W's. It's a way of trapping traders, making traders feel lost. Because imagine you are on an uptrend, all right? And then you see this. How do you know this is now a sell, all right? And you see that. How do you know this is now a sell? Most people will continue seeing buys, and then you see that. How do you know this is now a sell? This is still a buy, all right? But immediately, because of other analysis and all that we would have seen, we will be seeing that here is a key level, level 3 and whatsoever, and then we see the market do that. Then that's when we know that, okay, the market is now on a downtrend. Now, this is the reason why I advise people to take the ID50. It's because you know that by taking the ID50, the market has already shown you that it has formed a peak, and you are now taking the ID50 and you are moving away. All right. I said, listen very careful to this video because it's going to help you to understand the next video that I'm going to post after this one. But that is how the market issues M's and W's. Now let's go to the charts and find out what the charts have for us. All right. So for example, here on the chart, you've got a very nice M right here. All right. You've got a very nice M right here. As you can see, this M right here, where it is, it's actually at a key point. All right. So it forms the first leg and then it forms the second leg. So remember what I said, if the first leg touches the key point, then the second leg will not really worry about the key point. Now, what is the key point right here? Now, look at your left-hand side. If I draw a box right there, all right, and put a line on the top of my box right there, look at that. It's actually the neck of the previous M, okay? The neck of the previous peak formation. Now, this is not a coincidence. The fact that this neck is at this peak formation, or this M is actually at the neck of that M right there, then you do not expect the second leg to extend, all right? You do not expect the second leg to extend because it is already at the neck of that M right there, okay? That M right there. So you do not expect this one to extend. So you expect a lower second leg, all right? So you expect a lower second leg. But if this had turned around, maybe let's say the M was somewhere here and it formed the first leg there, then you were going to expect the second leg to be like that, all right? You're going to expect the second leg to be like that, so that the second leg does interact with the neck of that M right there. Okay, if I go to the 4 hour of this time frame, you can see you've got a very nice triple top right there. Like I showed you, you can actually call this a head and shoulder if you like. It's up to you. It doesn't really mean you need to be good with the names and all that, as long as you can see what is actually happening. All right, let me show you something that is happening recently. I said this is going to be a very short video, okay? So I'll show you something that is happening on recent charts so that you'll understand why the market forms certain M's and W's in certain areas. Now look at this one right here. You'll find you've got an M that appeared at that same spot there, and you've got that one right there, an M appearing at the same price right there. All right, so they will always happen at previous highs and lows, previous higher highs and higher lows, depending with where the market is actually going. If I zoom the chart a little bit, you realize that your M is also happening right here. Okay, you can see right there on the previous highs, that is exactly where your M is actually happening. So those highs and lows are very important. You expect price to actually react when it gets to them. Now, it's not like every time when you see a high and a low, you are like, I expect my price to react there. Not really. All right. But that is the expectation, especially if the levels are enough. Now, let's look at Euro USD. Look at what Euro USD did. It actually formed a peak on this week right here, and it has come again to the same area. And if you count your levels, you'll find that Euro USD has actually formed a peak in the same area again. All right, it has actually formed the peak in the same area again, and all they wanted was to tap that same area right there. With me right here is an M formation on a 15 minutes time frame. Now look at what happened right here. All right, the dealer actually formed the first leg, all right, and he formed the second leg in the same spot, and then he formed the third leg in the same spot. For some, you can actually say this is only one leg and this is second leg, still one and the same thing. All right, but the most important thing that I want you to see is this blue tracer right here. Now what this blue tracer means is that you are at yesterday's high. All right, so that is a key area to take price from. So you want to sell this pair and you want to know where exactly am I going to sell it. All right, look at yesterday's high price, and market quickly goes there. So you can actually even blindly enter a sell. I'm not saying just blindly take a sell wherever you see yesterday's high or low, but you can actually blindly take a sell right there, knowing that because you know the direction is a sell, the market is going to respond at yesterday's high. All right, and then it issues you an M right there at yesterday's high, and what happens after that? The market rallies away. So that is very, very important, guys, something that you need to take note of when it comes to these M's and W's. Okay, let's look for probably another example as well. All right, so these M's and W's will form at key levels. So when we say key levels, we talk about previous peaks, previous highs and lows, etc., etc. Right, let me try and zoom my page to see if we can find something. I always love to look for clean examples so that at least when I explain my point, you can easily understand what I'm talking about. And again, it doesn't really mean that it has to touch the exact same point. It can be near that area, even though it's not at that exact same point. Let's look at this one right here. Okay, so this one right here, it actually formed a peak right there, and then it sold, and then it stopped here, and then on the next day it pushes high. So you are expecting price to give you a setup around the high, these highs right here. All right, so either this high, because this is a peak formation, so either this high or this high, or at least on the following day, this high. So that means you could have taken this second leg right here. And I know for some, it was going to be difficult to say, oh yeah, but I didn't see an M formation there. If you don't see the setup, then don't trade it. For example, right here, they quickly moved away with price. So which was going to be difficult for you to take the trade. But looking at this, the market continued to move down, issuing you with higher highs and higher lows until it got to this point where it formed a peak. And this is 15 minutes. And then the market moved up. Now look at where the market gives you the setup right there at a key level right there, right? The market issues you a setup right there at the last lower high, and then the market moves away. All right, but this does not mean you trade blindly. Like I said, you wait for the setup. Look at this as well. The following day, last lower high. So they are not going for the higher highs, but they are going for the last lower highs. They are all key levels. All right, so you look for the key levels. Look at this one right here. Same thing again. The market showing you it last lower high. Now let's look at another pair and see what it here is. AUD/USD right here. All right. Again, what you see is the market formed a peak formation low for H1, H4, and moved away. So what you see on the second day, you see the market actually issued a setup on the last higher high. All right, on the last higher high. So you're waiting for a setup to form, and immediately you're seeing a setup forming. That's a key area. All right, on the last higher high. Okay, now on the following day, what happens? The setup happens on the last higher high again. Remember, your market is forming higher highs as it goes. So your setups are happening at the last higher highs. All right, it's not like they happen there all the time, but this is where the market is deciding to issue you your setups on the last higher highs. So you need to see these things. All right, it's not gonna happen all the time on lower lows. All right, there's some people would expect the market to come back down to the lower lows every time. Sometimes the market will only do the last high or low. All right, which is what we are seeing here. Now let's look at what happens on the following day. If you follow price on the following day, your last lower higher low is this one right here. So you can see the market did not interact with any of that. In fact, it was just consolidating, going up until it marked a low on this particular day, and the market gave you a setup on that low. Now you already know this is an uptrend, so you are looking for setups on the lowest areas. All right, on the lowest areas possible. That's where you are looking for a setup. All right, now what happened here on a Friday? The market issued you a setup on the last higher high. All right, on the last higher high right there. I know someone will say, but the last higher high is this one. Correct, it is that one. But as soon as the market formed that higher high, it then pulled back. So it is pulling back to that previous higher high. So you are not expecting the market to break that previous higher high. Let's say, for example, you have the market going down or pushing back, all right, or pulling back. So you can actually anticipate where the market will turn. So when I'm sitting there and looking at charts, I'm like, okay, I'm expecting the market either to not to break that high or not to break that low. All right, that is what I'm expecting. So that's what you're actually looking at, that either I don't break that high or I don't break that low. Now I'll leave this here, and like I said, wait for the next video, because this is going to explain to you the information that I've just shared here. Whether you understand it or not, like I said, this is going to be a boring video, but please listen carefully to this. If you want to watch it for the second time, please do, because the next video that I'll post will help you so much, and will help you to hunt for this kind of setups and know where exactly to expect them. Okay, cheers.